Hey guys, welcome to the fifth part of my options day trading course. If you're new here, I'm Tex and I share my journey with trading and investing in the stock market. So in the previous video, we looked at the technical skills required for day trading, and in today's video, we're actually going to do a technical analysis workshop where we can apply those skills that we've learned in more of a practical method. As a reminder, I put a card at the top of this video. Go ahead and click on that. It's going to take you to a playlist where you can watch any part of the course that you may have missed. Also, there's a lot of helpful links in the description below, so be sure and check those out. If you would, do me a solid guys, please hit that like button, show your support for the channel, really do appreciate that. So with that said, let's go ahead and get started with the video. Alright, so let's put into practice some of the technical analysis that we've learned so far in the course. As we discussed, support and resistance is really the most important aspect of technical analysis that you need to master. You really need to understand that very, very well. Your horizontal support and resistance are probably going to be the most important, but you can also use things like Trendlines and the Fibonacci retracement tool as well. So we're going to look at some specific examples of all of that in this little section. So when we look at this chart here on AMD, this is actually a daily time frame. So of course, every candle represents 1 day of time. What I like to do is use a top-down approach. So that just means going to your longer time frames and working down to your shorter time frames. You could actually go to as high as a monthly chart if you'd like, and we're looking at this as every bar represents 1 month of time, and it gives you a very broad, very macro view of exactly where we are. You can see AMD is trading up here very, very high when you look at the this very macro, this monthly time frame. If you go down to the weekly time frame, now we're looking at every bar representing 1 week of time, and this can be helpful to kind of see, clean the chart up, if you will, right? To kind of see trends that may not be as obvious when you go down to the daily time frame. So using that top-down approach can really help you see things that you might miss on those shorter time frames. So let's go ahead and bump it down to our daily time frame. And this is really the chart that you're going to probably spend the most amount of time on. This is where you're going to be marking up your important levels of support and resistance and really looking for marking out your trend lines and things like that. So when it comes to marking up your charts with support and resistance, what I like to do is to start by looking for the obvious swing highs and swing lows, or in other words, a pivot where the price moved in one direction and then pivoted and moved the other direction. So obviously we have a chart here where the price was moving higher and then it eventually pulls back. All right, so we're looking and then it comes up and then it pulls back. So we're looking for those swing highs and those swing lows, and start by looking for the most obvious ones just to make it as easy as possible. So let's just grab a horizontal line, and if we look here, there's an obvious one right there. All right, that's probably AMD's all-time high. We'd have to go to a monthly chart, but yes, by far it is, of course. So we go back to our daily chart. There's your first obvious swing high. All right, so we definitely want to mark that out. Let's grab our line tool and come back down here and look for a swing low. So what happened? We pulled off of that, and then looks like we based here in this area and then came back up. All right, and then if you look where we came back down, where do we come back down to? To that same area there. So there's a pretty obvious swing low there. So let's grab our line tool again and just drop it on just like that. You can see how perfectly that it lines up right there, right? So you've got your support right there from a swing low, you've got your resistance here from a swing high, and you can see the clear interactions that's happening here with this swing high here, and here with this kind of swing low and this consolidation area here off of that support level. All right, so you can see that very, very clearly. So now that you've marked out your most obvious swing highs and swing lows, you can start looking for a little bit more, I guess what I would say is minor swing highs and swing lows. So right off the bat, if we grab our line tool, I can see that right here is another one, right? Because we had price that traded up here and then it pulled back and then it traded up. And where did it trade up to? Right into that swing high right there. It pulled back briefly, and then it breaks out above that level, right? And then it puts in a new high here, but it doesn't sustain the move. What happens is it falls back below this previous swing high that was supposed to be acting as support, but it failed and fell back down inside of what we can see now is a clear developing range. right? So this is what we talked about when you have a range where price trades in between essentially two levels, almost like a channel. You have this range that the price is trading in between. We're looking at a daily chart, so you would actually kind of call this a macro range, right? So what does it do? It comes back into the range. So where's the most likely place it's going to go? Back down here to the bottom where it originally started, right? We had a gap up here. In between these days here, we had price gap up here, and then it moved higher, right? So this is really the start of this range. Price comes down here and really kind of confirms this range. To this point, we've only seen this much of price action, right? Assuming this hasn't happened yet. So we see that price comes down to the bottom of the start of what is a developing macro range. All right, so let's clear that off. So what happens? Price comes back up. Where is it most likely going to go? Right? To those previous swing highs where it attempted to break out here and failed, but it still obviously is a level that we need to be aware of, a level that's probably going to be respected. And what in fact does it do? It comes up, it comes over a little bit, but it ultimately fails. It rejects, it comes back down. So where's the most likely place it's going to go? Back down to the bottom of the range. And it comes down, it holds it perfectly, comes back up. Where does it go next? Top of the range. And then it pulls back again. But notably, what happens here, what does it do when it pulls back? It puts in a higher low. So as we see that, it does put in this higher low here, and then it comes back up into the top of this range where it's rejected off of numerous times, right? It comes back up into the top of that range, and then you get this big move higher. You get this big expansion in range right here. And part of the reason that this happens is because you have people who are buying this breakout move, which is a strategy to buy a breakout, but you also have short sellers who are having to cover their position, which is exaggerating the move higher. You have shorts buying to cover their position, and you have new longs opening positions trading this breakout. And you can kind of see that in the chart, right? If you think of a short seller, you see that people obviously buyers met technical sellers here and price pulls back, right? Once again here, they meet technical sellers. It tries to come up, but it fails. So here you especially have shorts chasing this move back down. They're looking for the stock to come back down. They're going to profit on the way down. It comes back up here. It fails. More shorts get in. Comes back up here. It fails. More shorts get in. So the longer that this goes on, the longer that it trades inside of this range, and the more shorts that pile into this thing, right, the more likely that you're going to have some kind of a breakout move higher, exaggerated by that squeeze effect of those short sellers covering their position and forcing the stock to move higher. All right. And so what does it do? Ultimately here, we see that after that breakout happens, where is the most obvious place it's going to go? Of course, that swing high, which is the all-time high, trades up into it for several days here, really struggling, pulls back. It does put in a higher low here. And if you look at this closely, another kind of nuance here, you'll notice that we did have a new minor swing high here, right? So your trend comes down to the bottom of that channel, comes up, it tops a little bit over, but it does reject. So it technically puts in a little bit of a more subtle swing high here, right? So if you mark that out, look how perfectly this pullback here after the breakout into this previous resistance here, it pulls back. And where does it pull back to? Right in to that swing high. Previous resistance, you're looking to act as support, right? In this case, it does, and it moves higher, and this time it's able to break over that prior all-time high right there. Now, this particular stock, AMD, did have some negative news that came out here on this day, and then this day we had some negative market news. So it ultimately did fail partly because of news-related events, but nevertheless, the technicals are there, and it does give you a very clear sense of how support and resistance work. So very good, very good analysis of how you can, really prioritize where to put your support and resistance levels. To make it as easy as possible, look for those swing highs, look for those swing lows, look for the obvious ones, look for the major ones, and then you can kind of start looking for the more minor ones. Like this right here was a new swing high that's a little bit higher than these two, right? But it's still worth noting because it is it is a little bit higher than those highs. So it's a little bit more of a minor nuance, but it is important to kind of see these things because it came into play right here when it held as support. All right, so let's go to another chart example here. All right, so as we look at Tesla here, let's take a moment and mark out where you think the most obvious swing highs and swing lows are. Go ahead and pause the video if you like, take a moment, and then let's see if you marked out the same levels that I'm going to be looking at. All right, so let's grab our line tool. The first thing I'm going to do, the most obvious one that I immediately see working from left to right is this one right here, right? And then the next one I see is this one right here, right? So obviously we had price moved up and then it's pivoted, right? So there's your pivot, there's your swing high, it comes down, there's your swing low, it pivots and it comes back up. So those are two very obvious swing highs and swing lows. Now, another thing that I want to kind of emphasize about marking support and resistance levels that you want to be paying attention to is your volume, right? So you've got your volume bars here across the bottom of the chart. If you see a particular swing high or swing low that has a lot of volume traded on that day, then you can kind of anticipate that that level is going to be pretty well respected. All right, so immediately when I look at my volume bars across the bottom here, I notice that there's one here that's significantly higher than anything around it, right? So there was a lot of volume traded on that day. That day is actually here, right? Here's that day. You can see that Tesla actually gapped up that day from the previous day, traded up to a high here, and then pulled back. Okay, so that's a pretty high volume day. That's worth noting. So what I'm going to do is go ahead and throw a line on that high right there. You see this long wick right here. Technical sellers really drove the price back down, and it ended up closing lower than it opened that day on very high trading volume, as you can see here with this bar. So I'm going to go ahead and throw a line right there on the top of that wick, just like that. All right, so now we have a significant swing high, swing low. We also have a notable day of very high volume where we had a pretty stiff rejection off there. I went ahead and marked that out. So if we look at this little bit of technical analysis, what we can see is off of the swing high, we come down and we actually grab support right here. It kind of comes in across this area here. Whoops, that's a little bit big. All right, so it kind of comes in across all of this area here where price was struggling to break above that level. It holds that previous resistance and it comes back up, but it puts in a lower high. It's not able to come all the way back up here to that previous swing high. So that's definitely an interesting piece of market generated information, but it does come down. And where does it come? It comes into this level that we just marked from this really high volume day. So it actually catches support from this day here that had this high volume rather than this swing low here. All right, so this is why it's important to pay attention to these technical nuances, right? It's very, very important, and it's something that takes a little bit of time, a little bit of practice. But like I said, if you kind of start with that top-down approach, look for your obvious swing highs and swing lows, mark those out first, and then start looking for those kind of more nuances with high volume or minor swing highs, swing lows. You start looking for those, and you can get a better sense of what levels are probably going to be the more important levels to pay attention to, right? And so what happens here, we have the swing high. Price essentially trades sideways for a little while, because what happens when you have a move higher or lower in a stock, it needs to kind of relax eventually. It needs to, traders, investors, they need to digest that move in the stock. They need to kind of come to acceptance with those new price levels before new fresh buyers can step in and see the trend continue higher, or obviously sellers if you were in a downtrend. So what can happen is a stock has a move higher, and then it's either going to pull back and then continue higher if the trend's going to continue, or what can happen after the move higher, it might just kind of trade sideways for a bit. Let's grab my tool. So it might just kind of trade sideways for a bit, and then the move might continue higher, right? So this whole area here is what's called consolidation, and this is just a resting period for the stock where, again, it's just kind of finding acceptance at those higher levels. So when we look at this, we can clearly see that that's what's going on here, right? After this initial move higher here, we have this period of just kind of a resting period, just kind of a consolidation period where the stock is kind of trading sideways before the next leg higher. And what happens here, you have this swing high that came in here, and here we come up into that swing high again after this extended period of consolidation. And then we have a significant move higher. We have a breakout move higher. So an expansion of that range, and then we move into the next kind of area where a new market structure is developing, if you will. So this is a really good example of that horizontal support off of a swing high, swing low, that extended consolidation period that can lead to another move higher in the trend after enough time has gone by for the stock to rest and traders to kind of digest those levels. It's worth also noting that the longer that this kind of consolidation period goes on, the bigger move that you would expect whenever it does see that range expansion, whenever it does break out. You would expect a much bigger move for a longer period of consolidation versus a very short period of consolidation. All right, so that's worth noting. Now, while we're on this chart, another thing that I would want to point out, we've talked about horizontal support and resistance, and we'll look at some other examples here as well on some other stocks, but clearing the chart off, one of the other forms of technical analysis that we discussed that you can use as support and resistance is trend lines. And one of my, go-to setups is a flag break in which it uses a trend line that is acting as resistance, and then you look for a break over that trend line on increasing volume to see a breakout move higher. All right. So when you look at this chart, go ahead and take a minute and see if you can pick out the obvious place where you would be placing a trend line rather that acts as resistance, and then you see a breakout point from that trend line. All right. So if you saw this from the swing high to here, you put a trend across like that, then you would be correct, right? So what you see here, trend line starts at your swing high, and then it connects to your lower high, which is exactly what we had there. And then price comes off the swing high, trades up into the trend line, and there is your creation of the trend line, if you will. It pulls back, it comes back up into the trend line here, and rejects, ultimately coming back down. But then we have a big gap up on this day over the trend line. Very notable, right? When price gaps up over the trend line, what does it do right here? It holds the trend line. It closes above the trend line. Okay, so then the next day we see that explosive move higher. We see that explosive move higher as this flag is broken. Okay, so essentially you can kind of see that, right? If I draw it out, you can kind of see the flag, right? You could say a trend here. It's more like a pennant, right? There's your pennant, and then boom, your breakout, right? So there was your period of consolidation, your extended period of consolidation. That is what we're going into September, October, November. It's like a few months of really kind of price consolidating in a tighter pennant type pattern, and then you get that significant breakout move higher. Okay, so really good example there on Tesla of the type of flag breakout that I'd like to see. And really the key there, again, is that you have this extended period of consolidation, where it's trading in kind of this tight range. And that long period really kind of gives you the potential for this explosive move. You'll also notice down here that the volume was increasing significantly higher on the breakout than it was during this period of consolidation where the volume was much, much lower. And that's what you want to see. That's really a key element of a breakout like this succeeding, is you have to have that increasing volume. All right, so really good example there on Tesla. Okay, so here is Amazon. We saw an example of this in the PowerPoint when we were looking at the technical analysis section of support and resistance. So you should be able to automatically spot the swing highs and swing lows. We marked them out previously, like I said. But go ahead and take a minute, just look at the chart, see if you can find areas where you would be marking horizontal lines of support and resistance, as well as trend lines. Where would you possibly be putting a trend line on this chart to get an idea where a future breakout point might be? Okay, so we are looking at the daily chart. Again, let's just go to the monthly chart, start with our top-down view. We can see that we're very high up here, but overall we are resting. The weekly chart makes it a little bit clearer, right? You have your move up, and then what are we doing? We're kind of resting here, again, creating a very similar pennant type shape. The longer that this goes on, the more explosive I would be looking for any kind of breakout move to be. So let's start with our horizontal support and resistance. Let's grab our line. Again, the first thing we want to do is look for the very obvious swing highs and swing lows. Now this one's really easy because it does have this really long upper wick. You can clearly see that there was very technical sellers sitting up here and really drove the price back down. after this move higher. So there's your first and most obvious swing high. Now let's look for a good swing low, right? So what happens when price comes down? It comes down here, comes up, it actually puts in a little bit of a lower low here before it's able to come back up here to that previous swing high. All right, so there's a good swing low right there. Okay, perfect. So what happens, right? Price trades up into this previous swing high, and it tests it for a couple of days, and then it breaks out higher, right? Unfortunately, though, it wasn't able to sustain the move. It comes back down, and on this day here, you have very emotional selling. Falls back down inside of that range, right? Comes down to the bottom of the range, and then it comes back up. Comes over the top of the range. Again, it can't sustain the move, right? It puts in technically a lower high from this high, which is the all-time high. It puts in a lower high here, and it falls back inside the range, right? And once again, it falls down inside the range, but it does put in a higher low, okay? Then it comes back up, but up here, again, struggles with that previous swing high, and technically puts in another lower high. So even though you do have a higher low here, you put in a lower high here. So this is really, you can see the pennant really developing here, right? So there was your major swing highs and swing lows. You know, like I said, obviously you also want to look for those trends. And if you were marking out this, then you were correct. This is going to be from your all-time high to your first lower high. Snap that on right there. There's your first and obvious trend. You could also say that there is one here, right? There's one, right? And you can kind of see the pennant forming here. You could also draw another trend. Let me just get rid of those to make it a little bit easier. So we'll go to this lower high here and connect to this lower high here. So that's going to give us a little bit of a steeper trend, right? So you have a couple of trends here that could be playing out. And if you look at this kind of closely here, you'll see that off of this higher low right here, price trades right into the bottom of the trend. And in fact, the trend starts here, it anchors here, and you'll see that obviously it was having a lot of trouble with the trend there on those days. And again, so it pulls up off of that higher low, trades into the trend for 2 days, and then boom, you get the breakout move higher. And this is good. You want to see this. But if we look at the volume on this day, the volume it's elevated, but it's not really super high volume. Okay, so worth noting, but nevertheless, the technical signal is there. You did get the break of the trend, and typically you would expect to see a continuation move higher. You would expect to see at least a continuation move higher up here to this previous swing high, right? That came in around 33.44, or possibly to this trend line here, to this larger flag that comes in here. And that's kind of what I was actually looking for in this, was to see that we get a move up into that area. But unfortunately, here lately in this market, we haven't been able to see really good day two continuation moves. And Amazon has been one of those that really hasn't been very good at that. But nevertheless, you can clearly see the technicals there when you use those trend lines and those flag breaks. It is technically still above. It is still above that trend. So that's worth noting. It may not be done, right? We may still yet see Amazon continue higher, and that would be very interesting to see when it gets up here into this more macro trend that goes further back, that's anchored to the all-time high here, right? So it's very notable. I would say definitely a more important trend line to pay attention to than this more minor trend line here. But nevertheless, it is there, and it's very good to understand what that is and how you can play that. All right, so let's move on to another chart. This time we're going to go over to QQQ, which is the ETF that tracks the NASDAQ index. And again, so we're looking at our daily chart. We can start out with our top-down view, go to our monthly chart, get a sense of where we are in the broader trend of things. We had this nice run up, pull back, and looks like we're trying to continue higher, right? When you look at that very macro view, go to your weekly view, get a look at what every bar is doing on a weekly basis, and then again down to your daily view. So starting out with your horizontal lines of support and resistance, look at this chart and tell me where you would be marking out your most obvious swing highs and swing lows. All right, so if you were saying here, really good. Yes, and this was one of the examples that we talked about, the candle shapes in the PowerPoint. there's your hanging man candle, right? You have this big move higher with a gap up, leaving this kind of hanging man sitting up there at the top. It's kind of in the shape of a hammer candle that would typically be bullish if it was down at the bottom of a trend, kind of like a pivot or a swing low. But in this case, it's actually a bearish signal. And in fact, we did get a very emotional pull off of there. So there's your, yes, there is your first swing high. And then we start looking, where is our most obvious swing low off of this trend, right? Swing high, trend comes down. Where is the obvious swing low? There it is right there. Okay. So if we clear this off and we zoom out and just see how this lines up with price action in the past, right? You can see that price trades up into this area here. It trades through it, has a lot of trouble with it at this point in time. Obviously, we're marking a later candle here, but nevertheless, you can kind of see how newer levels line up with price action in the past. It's not always going to be perfect, but this is a good way to start finding those most important levels. Another thing that you can kind of notice here is it's a relatively minor swing high right here, because you did have price that comes up here and then it pulls back and then it comes up, and it's kind of having a little bit of trouble with that area. So, and we left kind of a long upper wick here on increasing volume. You see this volume on this day is higher than the previous days, so it might be worth throwing a line on there. Let's just go ahead and do that, right? So you throw that line on there. Does that make sense? Yeah, I mean, I can see that we caught support here. I can see that right here in this area, price was interacting with it. It struggled to get over it, then it got over it, fell back below it, got back over it, and then the trend, continued higher from there. You can see again here, struggled with that level, but ultimately closed above it. And then again here, in these days, interacting with the level, not so much respecting it as perfectly, but nevertheless, it is there. And then once again here, you can see that price again comes down into that area, holds it as support, and then we see a continuation higher on the trend. So this was, the swing high here was the all-time high at the time for the NASDAQ index, right, for QQQ. Pulls back, comes up, puts in a lower high, right? Wasn't able to get all the way up to that all-time high, and then it pulls back, right? Holds support here, then it comes up. Again, kind of a double top situation right here, actually, right? It didn't get up here. So notable. That's a notable piece of market-generated information. And then it comes down, puts in a higher low, comes back up, and this time we're finally ready to back test that previous all-time high. So it back tested, it slowly crawls above it, and then we have a liquidation break back below it here. And then once again, we move back above it. And then just most recently today, on the pullback today, where did we go? Right into that prior all-time high and held it practically to the penny. So really, really nice example there of a very prominent swing high, something like an all-time high. That's a huge level. Everyone's going to be looking at that. That's a level that is a very obvious level that everyone is seeing and everyone is going to respect. So always be aware of your all-time highs, and that's a really good example of a back test of a prior all-time high and holding as support. All right, so let's take a look at a gap example, something where you have a gap as seen on a daily chart. Okay, so this is a stock that had a pretty big gap down, right? Right here on this day, I believe it was earnings in particular that came out. You'll notice that the stock gapped down really, really big. And all this basically means is that during pre-market or after hours, in between those 2 days, in between this day and this day, there was just bad news that came out, and the stock just left this huge hole here. And these gaps are actually technical nuances that you really want to pay attention to, because they do offer really good trading opportunities. Stocks don't like to leave gaps unfilled. They will leave them unfilled, or they can leave them unfilled for quite a long time. But eventually, all gaps like to get filled. And it's a very common strategy to kind of look for gaps and look to take advantage of any type of a gap fill. So in this case, it depends on how you mark the gap. Some people mark the gap from the previous close to the previous open, and some people mark basically the true gap. So if you were going to go from the previous close, since this was a green bar, the previous close is here, to the open would be here, right? So that would be your gap. I prefer to mark gaps, the true gap, so it would be from the low here to the high here on the day of the gap, right? So there's your gap. And if you look at this, you'll notice that price is currently inside the gap today, right? So there it is. So we are inside this gap, and it's very possible that we may see a gap fill. However, this is a huge gap. This is a monster gap, right? So it may not fill this whole gap. It may only fill half of this gap. But nevertheless, it's very important to know these levels. So what I like to do whenever I do have a gap and I want to mark it out is I'll mark the top of the gap. And I usually in TC2000, it doesn't matter what you're using, just go ahead and change the color of the line to some color that you only use for gaps. That way you know what that line is at some point in the future, right? So we'll go ahead and mark the bottom of the gap. And again, we'll use that same color. All right, so there's your gap, and you can clearly see price moved inside of the gap today. If we go and look at a 5-minute chart, we'll see how that actually looks, right? So here is your open, all right? There's your opening candle for today. Price trades right up perfectly into the bottom of the gap, and it pulls back, right? So you have this move up, it pulls back, and then it comes back up into the gap, right? And what does it do right here? It gets above the gap, and it holds it for about 10 minutes or so after getting above the gap. These are 5-minute candles, right? So it holds it for about 10 minutes or so, and then boom, up into the gap it goes, right? Especially on increasing volume. See the increasing volume after it gets above the gap, it's holding it as support right here. And then you see that increasing volume and the move higher. Really, really good trade right there. So that is what you'd be looking for whenever you have a gap like that. You want to see the price ideally come up into the gap and test it. You know, you want to see it kind of pull back off of it. You don't want to see it just rip through the gap. You want to see it pull back off the gap and, you know, ideally put in like a higher low here, then come back up into the gap and get over it and hold it as support. You want to see this confirmation that it's holding that gap as support, and then there's your trigger to get into the trade and look for at least a partial gap fill. You know, if it's a small gap, it'll probably fill the whole gap. But for a large gap like this one, it may not fill the whole gap. So something else that you can do when it comes to gaps that I like to use is Fibonacci retracement. This is a really good tool, especially for gaps or for when something is trading over the all-time high, when there's no resistance above. In this case, let's use our Fibonacci retracement. And what I'm going to do is go from the true gap, from the low of that day, to the high of the day of the gap. All right. So now what we have here is we have some Fibonacci levels, and most importantly, we can clearly see that 50% of the gap fill is here, about 185. Right. So there's 50% of your gap fill. The magic 61.8 number is there, and your 38.2, sorry, is there. All right. These are the three levels that I pay the most attention to on a Fibonacci retracement, but especially the 61.8, right? And then when you're talking about using a Fibonacci retracement inside of a gap, the 50% as well, because it's retracing half of the gap is a really common resistance level for any kind of a gap fill. So this stock actually looks pretty good for a retracement to about half of the gap. And I also like how we have a bit of a swing low coming in right here, right around that 50% mark on the gap fill, or the half of the gap fill rather. So very useful tool to use that Fibonacci inside of a gap. All right, so there is a good example of a gap. Let's go ahead and take a look at another chart. All right, so here is Alibaba's chart. This is again the daily time frame. So take a moment, go ahead and look at this chart. Let me zoom out a little bit so you might have a little bit more information. All right, take a moment, look at this chart, and tell me where the most obvious swing highs and swing lows will be. All right, so again, if we start from the left and work our way to the right of the chart, let's grab our line tool. The most obvious swing high I see immediately is right there. Okay, so obviously we had price trade up into that, pulled back off of it, trades below that level for quite a while, and then boom, we have a breakout above that level, right? So we have essentially a very obvious range down here and a higher range above that level. That was a significant level. That was probably an all-time high if we went back and looked, but Zoom out. Yeah, it was. That was a prior all-time high. So a very significant gap up and move above that level right here, right? So that was one. Let's go ahead and see what else we can find here. So let's grab our line tool and we'll zoom in. Went to the wrong time frame. All right, so we have a little bit of a swing high right here. You can clearly see how when price broke above this level, traded up to here, and then pulled back and started to relax a little bit. So there's another swing high right there. And then again, when you look at this, you can see how price traded inside of this kind of range right here before we finally broke out above that range here, right? So there was a good swing high example. And again, you see that price trades up to another swing high here, right? So we could go ahead and mark that out right there, and then it pulls back. So it pulls off that swing high. Where does it pull back into? Into that previous swing high there, where it holds it for many days here, and then it comes back up into this swing high here, right? And then price gets above that swing high, and it trades in a rather tight range for quite a bit here before it does pull back down. So this is technically Alibaba's new all-time high right there. So we'll go ahead and mark that out. There's another swing high. All right, so immediately we have the most obvious levels of support and resistance that we definitely would want to be paying attention to. You can kind of break the market structure up this way by looking for those obvious swing highs and swing lows, and then you might dial it in even further on a kind of a little bit more of a shorter time frame to see exactly where more nuanced levels might be, right? So you can actually see here that there is an unfilled gap on Alibaba, right? So what we would do here is, again, mark the top of the gap, and we'll change the color of the line to this kind of brown color. And we'll do one more time at the bottom of the gap and change that color. All right, so we have this unfilled gap right here. Okay, so price gapped down, and then it traded up here, and then it pulled back, and currently is trading down here. So at some point in time, it seems likely that Alibaba will come back up and fill this gap. Right, so very notable that we do have that gap, and that also falls in line nicely with a swing high here. You can see this high here on this day, this low on this day, almost catching that low there. So you can see how that 280 level, plus it's a whole number, your whole and half numbers are psychological levels of support and resistance. So I really do love that on Alibaba. That's something that I would definitely be looking for. What you can actually do is just come in here and set an alert for, let's set this for a year. Said okay. So now I will be alerted anytime Alibaba gets back up here to this 280 area. And basically you've got a 10-point move right there. 280 to 290, very high probability trade that once Alibaba moves up inside of that gap, it's most likely going to fill it. So definitely worth noting. You could also come in here, like I said, and mark up your more recent kind of, I guess, minor swing lows. You can see right here. Here's a kind of a little bit of a minor swing low, right? Price pulled off of that all-time high, caught support here, bounced up. Here's a minor swing high, which is also the bottom of that gap, as we just discussed. It pulled back here. Where did it come to? Right into that previous swing low right there, perfectly, almost to the penny, right? Very, very nice example of gaps and swing highs and swing lows on a different stock. All right, so the last thing I want to look at is kind of what I alluded to with support and resistance, is these market structures that it really develops. And sometimes it's easier to see this on something like an hourly chart. I would also note that using TC2000 here, you don't have access to really much pre-market or after hours data, only the current day. If you're using like Thinkorswim or eSignal, you will have access to lots of days of pre-market and after hours data, and that can give you kind of some more nuanced levels that do happen in pre-market and after hours. But your regular trading hours levels are going to be the more important levels you want to pay attention to. So it still works fine in TC2000, but it's just worth noting that what we're looking at here on this hourly chart is technically just regular trading hours. So from your market open at 9:30 to 4 o'clock. So if you grab a box tool and just kind of look at the chart for a minute, you can kind of start to see these structures, right? So if we grab a box and go across like this, you can automatically see that you had resistance here, and that created resistance here. Price eventually broke through that resistance and moved up into a new range, if you will, traded to a high here, pulls back to the bottom of the range here, goes up to the top of the range here, tries to break out above the range, but really doesn't go anywhere, falls back inside the range here, comes back down to the bottom of the range, a little bit of a momentum overshoot there, but it does come back down and hold the bottom of the range, and it moves higher. And this is where we currently are right now. Okay, so you can start to see this, right? There's your first your top, your uppermost market structure. If we grab a box again and we just kind of start right at the bottom of that box and come down and create a box roughly about the equal size, most of the time it's going to get you probably pretty close to the previous range. It's a little bit bigger in this case, but you can kind of see this, right? You can see that inside of this range here, we broke below here, came up and back tested here, and then eventually got back above it, but failed to hold it, came back below it here, came back above, clearly holding support here, and then we move up into this new range, back down to the bottom, up to the top, down, put in a higher low, and then the move into a new range or a new higher market structure above that. And this is really just kind of a rinse and repeat. If you kind of zoom out on the chart, you will be able to do this over and over again. So let's put this back on here, right? There was one. Here was the other one, something like this. I think it was right here. Yeah, there's your second one. Yeah, a little bit easier to see there. And in fact, if we extend that over further to the left, it should line up. It does. Look at that. It lines up very nicely with a prior swing high right there, right? A very obvious and prominent swing high, I might add, where you have this price coming up and then a very emotional pullback off of that swing high. So there's another market structure. And you come down, you can probably do the same thing, right? Grab the right tool here. Let's see. So we'll grab another box and try to make it roughly about the same size if we can. Yeah, it's pretty close, right? So here we go. You can see where price comes up here and struggles, but ultimately does get up into a new market structure area. A new area of supply comes in, emotional sell-off. Anytime you have these emotional sell-offs, usually news-driven or whatever the case may be, it will often overshoot levels and just fall right through. So that's not uncommon. But more importantly, what does it do when price eventually comes back up into that level here, right? And here, and here. So it becomes obvious when you really take a step back and look at those macro views. Look at something like a monthly chart. A weekly chart can often clean up the trends and make it easier to spot these things. Another good example was I think was it PLTR? Let me take a look at this one. Yeah, so here's your daily chart on PLTR. You can automatically kind of see this trend here, which this thing looks like it's setting up very nicely for tomorrow. We've got a close here above this flag, so I'm probably going to be looking for some breakout move higher tomorrow if it wants to go with volume confirmation. Definitely a really nice flag example there. Sometimes it's easier to look at your longer time frame charts. PLTR is a relatively new stock. It IPO'd this year, right? So it doesn't have much market data on it. But if we're going to look at something like Amazon, I believe this was one. Let's clear the chart off. Yeah, so when you're looking at this daily chart, it might look a little bit messy because you have, all of this up and down throughout this period. Maybe it's a little bit hard for you to kind of see that trend. That's when it can be really helpful to go to your top-down approach, move up in your time frame. So you go to that weekly time frame, now all of a sudden it's a lot more obvious, right? We have this very, very obvious pennant forming here as seen on an hourly chart, right? You look at the difference, right? There's your hourly chart. There's your daily chart. Big difference, right? So it kind of cleans it up. It makes it a little bit easier to see these things when you do use that top-down approach. So that pretty much covers everything that I wanted to do as far as putting into practice your horizontal support and resistance, especially. Again, focus on those obvious swing highs, swing lows. Pay attention to the volume bars. What is the volume doing on those particular swing highs and swing lows? If you see a day that has, a volume that's significantly higher than the average volume on a swing high or swing low, that's a very important a pivot level that you want to be marking out and paying attention to. Look for those obvious trends. Look for those possible flags. Again, we talked about, PLTR was a good example that's setting up literally as we speak. So look for those obvious trends that you can mark out and really take advantage of. All-time highs, of course, always a very important level to pay attention to. Everyone sees that level, so it's going to be respected. And then gaps, look for those gaps. Those are really good strategies that you can take advantage of. SPLK, Splunk is one that looks good. It definitely looks good for continuation move higher to possibly fill at least half the gap. And you can, again, use those fibs to kind of give you an idea of, where is half the gap exactly, and where are those magic fib numbers, that 61.8 in particular. Okay, guys, so that wraps up the 5th part of the course. I really hope you enjoyed that technical analysis workshop. Be sure to let me know in the comments below if you found some value from it. So the next part, we're going to learn all about options, what they are, how they're priced, how to pick strikes and expirations, and how to manage your risk as well. Now, as always, guys, I really appreciate you watching. Please show your support for the channel. Make sure you did click that like button and also make sure you're subscribed as well. So until the next time, I'll see you then.